In this module, we are going to discuss the 2025 Focus on Practice Inspection from CPA Manitoba. And as always, we want to be efficient and effective, follow professional standards, and document what we have done properly. As we go through this presentation, we're going to find things that Practice Inspection has said are required, that you have to do. And as we compare these to professional standards, we will find that some of these things, in fact, are required. Some of them are a really good idea, but they're not required. And we'll also find that some of the things they say are required are not required. So, for instance, one of the recommendations is practitioners follow Section 4200 on compilations. Now, that's a requirement. It's been around since 2020. Practitioners should do it. They're being very nice. They say, oh, this is recent. No, it's not. Introduced in 2020, practitioners should be doing this. They recommend an annual engagement letter. Now, I think that's a really good idea. I would personally recommend that, but it is not required. So I think practitioners should think about doing this, and I would recommend that they do. But if this is in your practice inspection report as being required, even if your report's a year or two old, ask that it be removed so they don't bring it up the next time they come and visit. In the report, they say the engagement letter should be obtained at the very beginning of the engagement. That is not required, absolutely not required. Not required in audits, reviews, or compilations. What is required is prior to, not at the very beginning. So prior to is before. So an engagement letter that you got a year ago is prior to. That's not a requirement. That's not correct. If that is in your practice inspection report, ask to have it removed. With respect to 2448, 2448 says consider if records are adequate for analytical procedures. In the Focus on Practice Inspection report, they say this is required documentation, and they say the practitioner should ensure. It is not required documentation, it is shall consider. And ensure is too much. I don't think you even ensure things in an audit. So that word shouldn't be used, and we shouldn't use that word in any file. Ask to have this removed from your practice inspection report. Now, as a practitioner, might you have a checklist prompt to say, I considered whether records were adequate for analytical procedures? I would. I like to remind myself of that. I like to think about it. Consider means think carefully about. So might I have a checklist prompt? Not because it's required documentation, but it's just something I'd like to do. Yes, I might like to do that. So we should think about these things. We should think about the practice inspection report we received, and we should think about whether or not there are things in our practice inspection reports that need to be removed. Now, this is anecdotal. I haven't talked to everyone, but some of my colleagues tell me that they get these comments, and some of my colleagues do not. And I don't quite understand why that is. So I'm having to speculate, I'm having to guess, but it may be that the people that did not get the comment had a checklist prompt, like we just talked about. And I'm kind of a fan of checklist prompts. I like to remind myself of the things that standards say I shall do, even though I don't have to document them. So I'm a fan of checklist prompts, but perhaps having the checklist prompt and ticking it off in your file causes the practice inspector not to make the recommendation. The other thing that may have happened, and I know this happens with some of my colleagues, they know what standards are. If practice inspection says, hey, you have to do this, it's required by this standard, they point out that no, it's not. It's not a shall document requirement, it's a shall consider requirement. I don't have to document it, please take it out of my report. So you have to decide how it is that you wish to deal with practice inspection, because I see some of my colleagues burdening their files with all kinds of unnecessary documentation, and sometimes using words, for instance, that may have been suggested by practice inspection, like ensure. I ensured that this happened in a compilation engagement. Can't do that. The first thing the report does is it talks about the purpose of practice inspection. First thing being to protect the public, making sure we practitioners are doing a good job. And second, it says it's educational, that there should be guidance on tools, courses, and other. And I think that's something probably that CPA Manitoba could do more of. The results of practice inspection: 31% no further action, 46% corrective action, 23% full or partial reinspection. So the first thing that probably says is firms need to do better, though as we go through this presentation, we will find that perhaps some of the things where firms are not doing the right thing are an incorrect interpretation of standards. The report says that problems are due to recent changes. They specify two sections: 4200 compilations, which was issued in February 2020 and effective in 2022, and quality management, which was issued in 2021, and it had a series of cascading effective dates starting in 2022. My observation would be, and this is very nice, but this is 4 or 5 years now, and it's not recent. This has been in previous practice inspection reports. So practitioners, members need to get on the case on these two. There were overall suggestions. 1, keep up to date on all relevant CPD. Sure. 2, ensure all tools, checklists, and other materials are up to date, of course. Set fees appropriately for the work done, correct. And only accept engagement work that aligns with your skill set. Also, couldn't agree more. Overall suggestion number 5. I'm going to read this quickly because I'm not entirely sure I agree with this. Engagement files must be fully documented. Engagement file needs to tell the story. Don't know that tell the story is in standards. Important to document the file to the extent experienced practitioner. That sounds about right. Can understand the situation of the entity. That's a new one. And can understand and can draw the same conclusions as the practitioner. I don't think that's what standards say. Suggestion number 5, the engagement file needs to tell the story. Well, tell the story is not in standards. Primary paragraph on what we have to document, overall documentation, is 230 paragraph 8. Shall prepare audit documentation sufficient to enable an experienced auditor, no previous connection, to understand nature, timing, and extent, results or procedures, evidence obtained, significant matters arising, and conclusions reached thereon. That's not what the paragraph I just read said. When we compare in detail, the report says important to document the engagement file, standards, the auditor shall prepare audit documentation. That's slightly different. To the extent that an experienced practitioner, not to the extent sufficient to enable an experienced auditor, having no previous connection with the audit, having no prior knowledge of the client engagement, that's different. Can understand and to understand. I prefer the exact quote. That's what standards say. Now, one of the things that I think is happening here is they are trying to write this paragraph to be appropriate for audits, reviews, and compilations. And the requirements for audits, reviews, and compilations are similar, but they're not the same. So you get into difficulties and say things incorrectly when you try to do that. I think that's one of the problems. So let's find out what the word should be. The report says can understand the situation of the entity. That's not in 230 paragraph 8. That shouldn't be in the report. So the next part says can understand how the engagement was performed by following the documentation process and draw the same conclusions. Neither of those three things are in standards. Understand how the engagement was performed. Well, maybe. 230 paragraph 8 says understand the nature, timing, and extent of procedures, results of procedures, and evidence obtained. Maybe we can determine as how the engagement was performed. But we don't have to understand how the entire engagement was performed. Paragraph 8 has two specific things about the engagement that we have to understand. Following the documentation process is not mentioned anywhere, so that should be taken out. And draw the same conclusions as the practitioner. Let me edit 230 paragraph 8 just a little bit. Shall prepare documentation sufficient to enable an experienced auditor to understand significant matters arising, understand conclusions thereon, and understand significant professional judgments. Not draw the same conclusions, not agree with. Professional judgment means that there would be differing acceptable conclusions, that two practitioners faced with the same set of circumstances, one giving slightly different weight to some things, one giving slightly different weight to other things, will legitimately come to different conclusions. And the definition of professional judgment is an informed decision about a course of action appropriate in the circumstances, not the correct decision, not a decision that someone else will agree with. So that part of the statement is just wrong and should be removed. Overall suggestion number 5 is not close to what standards say, audit reviews or compilation. It is confusing. I would prefer that people use the exact words that standard setters specify. This may cause unnecessary documentation and procedures and should be removed or corrected. Just for completeness, let's go over the requirements for reviews and compilations. First one there is for reviews shall document. Adds the phrase the following aspects because they've written it slightly differently. Adds in a timely manner, sufficient to enable the experienced practitioner, no previous connection. That's all the same. And then they talk about nature, timing, and extent. They talk about results and significant matters. And then paragraphs 104 to 107 are similar to 239 to 11. So it's a very similar requirement. It's slightly different. Standard setters could have made it identical if they'd felt like it, but they didn't. The compilation requirement is shall prepare documentation, and this is different in the practitioner's judgment. So if someone comes along and says, well, I don't think you prepared enough documentation here, you say, well, I think I did. In my judgment, I did. I've documented that, so your opinion is irrelevant. The requirement is I shall prepare documentation that is in my judgment sufficient. So I did that. And if in your judgment it isn't sufficient, that's irrelevant. So enable an experienced practitioner, no previous connection, to understand. Then what it does, it provides a list. It says, as a minimum, you got to document the following things. So they're similar, but different. The requirements are similar, but different, so they need to be rewritten or specifically written for each. You can't generalize. I prefer quotation of the exact words, not a rewritten version of the standards. Before they talk about independence issues, they note that CPA Manitoba does not set standards, which, as we have just discussed, they just seem to try to do. So they should be very careful not to set standards. Independence issues mentioned were prohibitions were not identified. Well, you should have a checklist, have a standard checklist, audits, reviews, compilations, have a checklist and do it. Threats were not identified. Bookkeeping, for example. Bookkeeping is a threat, but that can be dealt with in a checklist step, so have one and do it. They talk about other threats, management to approve entries prepared by the auditor. Now, they should not use the word prepared. If you look at the Code of Professional Conduct, preparing journal entries is not allowed. You may not prepare entries. You may propose entries, but you may not prepare entries. So the word prepared is inappropriate and out of place and should be removed. You should have a standard representation letter paragraph where you say, we have approved all entries proposed by you, not prepared. Safeguards and reassess independence if there are changes. Have a checklist, do it. I'm going to talk about some accounting issues, but as we do this, remember that requirements apply to material items. So if an item is not material or immaterial, that recommendation, that requirement can be ignored. So if you as an auditor have done that and ignored a recommendation, that's entirely acceptable. The practice inspector comes along and says, hey, you ignored this. You say, well, it's immaterial. The practice inspector could legitimately say, well, you didn't document that, and that might be a point. So if you come to an accounting issue where you decide that it's not material to apply that particular accounting issue, brief note in the file, thought about it, not material, drive on, think that's acceptable. Now, I assume this is true. They talk about 3,400 revenues, but the report is not clear what the problems are. There are some requirements for disclosure in 3,431 to 35A, but they're very specific, and I'm not clear which of those paragraphs practitioners weren't following. So it'd be helpful if they were more clear and specified better. Again, with respect to related party transaction disclosure, not exactly clear which of the requirements of 3856 were missed. There's general advice, follow 3856. Be more helpful to me if they said which requirements weren't being followed. Again, 3856 with respect to redeemable preferred shares. Those are complicated requirements. The advice is general. I can understand what might be happening, but again, I think it would be more helpful if we specifically referred to what was being done wrong. 3041 agriculture says disclosures are missing. There are a number of required disclosures. Not quite exactly sure which ones were missing, so it would be helpful to specify which were missing. Part 3 NPOs says practitioners are blending the standards, but it's not really clear what that means. I think what it means is practitioners are sometimes in a single set of financial statements using the deferral method and the restricted fund method, both in the same set of financial statements, but it's not clear that that's what's being done. Clearly, one should follow the rules. It would be helpful if what was being missed was specified more clearly. There are audit issues discussed, so let's go through these. As an aside on documentation, we have to be very careful to follow what standard setters say. And if standard setters say shall document, that is something that we must document. And it says that around 35 times in the audit section of standards. It can say shall document or in writing means the same thing. If all standard setters say is the auditor shall, and they say that lots, there is no specific documentation requirement. Though sometimes when you read the shall document requirement, it includes some of the previous shall requirements. So you have to be careful with that. But 230A7 very clearly says it is neither necessary nor practicable for the auditor to document everything. And 230A7 also says that some things document others. So if you've documented one thing, that satisfies perhaps other documentation requirements. 238, 9, 10, and 11 are shall document requirements. Talked about 238 already. The other thing we've got to watch here is 230 paragraph 8 has an experienced auditor to understand requirement. And some people say, oh, that means an experienced auditor has to understand every single thing. And if it says the auditor shall, the experienced auditor requirement includes that. Now what it says, only the items in paragraph 8 are an experienced auditor to understand. We've already talked about those. There are 3 things that an experienced auditor is to understand. That's it for the experienced auditor requirement. Now, as a practitioner, perhaps the more you document, the better. It might be efficient and effective. If it says the auditor shall consider, for instance, you might wish to include a checklist prompt saying, I considered. So the more you document, perhaps the better. As guidance for staff and reminder to yourself, perhaps that's not a bad idea. But we've got to be very careful with shall document as opposed to shall. We're going to talk about a comment that says the auditor shall obtain signed engagement letters at the beginning of the engagement and the representation letter at the end of the engagement. Their grammar, not mine. That's not quite right. Obtain signed engagement letters at the beginning of the engagement. Have to be very careful as we interpret that, and there are 2 issues. The first issue is there are two letters. There is the first letter and the reminder letter, and the rules are different. The other issue is that there are three different types of engagements: audits, reviews, and compilations. The requirements are similar but not the same. So the question is this good advice that we are providing practitioners? Is it good advice to obtain the letter at the beginning of the engagement? Or is that a requirement? Can you be criticized if you failed to obtain the letter at the beginning of the engagement? 230.10, paragraph 9, requires the auditor to get an engagement letter, but the timing is not specified. So at the beginning of the engagement is not specified. A23 says that it is desirable in the interest of both the entity and the auditor that the letter be obtained before the engagement commences. So when is the first letter to be obtained? Clearly before is a good suggestion, not at the beginning. At the beginning is far more specific in terms of timing than before. Now, is this a good idea to protect both yourself and the client? Yes, it is. I would prefer the use of the word before. That's the word in standards. Let's now talk about the second letter. Now, the second letter, or the next engagement letter, which I'm going to call the reminder letter, 210 paragraph 13 says, on recurring engagements, the auditor shall assess whether circumstances require the terms to be revised or whether there is a need to remind. So revise or remind, I'm just going to call that the reminder letter. That gives us two choices. We shall assess whether to do it or not. So if we haven't done it, our file documents that we haven't done it, so we assessed it and we didn't do it. We could assess it and do it. The third choice is paragraph A30. This is a rather too long set of matters to consider to decide not to reissue or to reissue or not. And it might take rather too long then, for instance, to just automatically decide in all engagements, I'm going to issue a reminder letter annually. The date of the reminder letter is very clearly not specified, as is the date of the first letter. It's not specified. It's suggested. And if you obtain a reminder letter at the end of last year, that's before this year. That meets the suggestion in the standards. And as there is no requirement, you cannot be told that you have to obtain the letter at the beginning of the engagement. So practitioners may pick a convenient date to update, and certainly at the beginning of the current engagement is acceptable. But at the beginning of the current engagement in a smaller client, you may know little about changes in the client's circumstances. Accordingly, dating the reminder engagement letter at the same time you're preparing this year's representation letter, when you will know the most about your client, may be a solution, and it meets the requirements of standards. The AASB Canada is very clear on what they mean. In the basis for conclusions for section 210, they say they considered requiring annual reconfirmation of the terms of the engagement and decided that this matter is an operational issue that may be common in practice, but not a requirement that should be in the standard. So they're very clear. You don't have to do it. It's probably a good idea. It's an operational issue. Practitioner will decide when operationally it is most convenient to date the letter, but there is no requirement. The only suggestion is before, not at the beginning. Obtain the representation letter at the end of the engagement. Again, two problems. First is the requirements for audits, reviews, and compilations are slightly different. As a practical matter, you can find a way to make them consistent in your practice, but not necessarily as required by standards. And second, at the end of the engagement is insufficiently specific. The end of the engagement could be the end of fieldwork. That's the wrong date. The end of the engagement could be the date you draft the letter. That's the wrong date. The requirement 580.14, the date of the written representation shall be as near as practicable to, but not after the date of the auditor's report on the financial statements. That's much more specific, and there's also a specific requirement of when the audit report shall be dated. The date of the rep letter, as near as practicable. Don't know what that means. A day, a week, a month, a year. Don't know what that means. So it's uncertain, meaning my preference is just make it the same date as the audit report. We draft both the audit report and the rep letter at the same time, make them the same. That's simplest. The other thing we have to remember is 749 says that the report cannot be dated till the board approves the statements. So in an audit, we have to find out when the board plans to approve the statements. There is a future date for the audit report, the rep letter, and the financial statements. So we have to find that out and may as well just make them the same. So dating the rep letter, the audit report, the same date as the board approval, make them the same, and may as well issue the engagement letter for next year as of that date as well. That qualifies as before. It is best practice to obtain clear, explicit sign-off by management on a listing of adjusting entries. That may be best practice. It's not a requirement. At very least, you should have in the representation letter a statement that we have approved all entries proposed by you. And be careful to use the word proposed. We are not allowed to prepare entries. That would be an ethical violation. We only propose entries, so use the word propose, not prepare. So that the requirement goes beyond the standard. It's a good idea. You don't have to do it, as long as you have approval in the representation letter. And to ensure that the summary of uncorrected misstatements is always attached to the fully signed letter. I don't know what a partially signed letter might be, so therefore I don't know what a fully signed letter might be. 450.15 is clear that the unadjusted errors shall be included in or attached to the written representation. So the second part of that is right. The report says 315 requires robust documentation. Not sure what that means. Robust is normally a word used in the context of physical fitness. I don't exactly know what they intend it to mean here. Extensive, a lot of documentation of the auditor's understanding of the entity in all areas impacting financial reporting. And then they talk about the client's information processing activities. I think robust documentation exaggerates 315. It's unclear at least. 315 paragraph 9 talks about scalability, and it's very clear that the requirements of 315 may be simplified for less complex entities. So does 200A69 and the paragraphs that follow that. Specifically, 315A241 says, for audits of less complex entities, the form and extent of documentation may be simple and relatively brief, which is the opposite of robust. So I think it's very clear that this is an exaggeration of standards. Practitioners, auditors should read and understand 315 and apply the numerous scalability provisions in the application material, which 315 is pretty good at providing. Here's another place where I would prefer that the report use the words standard setters provide rather than trying to reinterpret it. The report says auditors place a lot of reliance on information provided by the entity subject to audit. It is important for auditors to carry out procedures to confirm the information is complete and accurate and hasn't been modified, including obtaining, supporting, or corroborating information from third parties where possible. That's not close to what paragraph 507 says. It says, when designing and performing audit procedures, the auditor shall consider, not carry out procedures, not confirm the information is complete and accurate, consider the relevance and reliability. Consider means think carefully about. No requirement to document, shall consider, not shall document. The information to be used as audit evidence, including information obtained from an external information source, hasn't been modified, and they imply that when we are getting information from third parties, we have to obtain corroborating or supporting information from third parties where possible. So that's very much an exaggeration of what standards say. Not carry out procedures, only consider, think carefully about, not do procedures, and this is a shall, not a shall document requirement. Now, you might want to have a checklist prompt that says, I considered the relevance and reliability, just to remind yourself that that's an important thing to do, but that's not the requirement. Audit sampling. I haven't quoted everything they say, but apparently practitioners are requiring a standardized methodology for determining sample size, finding that the standardized methodology produces a sample size of 100, and saying, oh, that's too many, so let's just do 20. Now, that's a clear argument for not using a standardized methodology. If it is consistently producing sample sizes that professional judgments determines to be too large, stop using it. But if you want to use a standardized methodology, you have to use it. If you say we shall always use it, you have to use it. And if it produces sample sizes that you think are too big, you have to use it. Now, PCAOB, Peekaboo in the States, has forced firms to go back and complete the firm required sample size, even if it was a year or two later. So that's embarrassing and a waste of time. So I would agree with the report. If you mandate a firm required methodology, you have to use it. My personal recommendation would be, first thing to think about is sampling appropriate in the first place? Are we defaulting to sampling when there are other things we might do? Standard setters are clear that extensive testing is the third most important thing to consider after nature and timing. So perhaps we are doing sampling in places where we shouldn't. Second thing is abandon the standardized methodology. If it's consistently producing samples that are too large, it's obviously wrong. Delete it from firm standards. Now, you might wish to provide a statistical methodology, but I would recommend that staff first use judgmental sampling. The reason firms adopt a statistical standard firm methodology is they are not confident in staff ability to determine sample sizes. So if you're confident that your staff partners can determine sample sizes appropriately, you don't need to mandate a sampling approach. Review engagement, section 2400, paragraph 47. There is a list of things that we are required to inquire of management about and get documented. And there's actually more than that list in section 2400. Do it. Get a standard rep letter. Make sure you have inquired and documented those inquiries in the rep letter. 2400, paragraph 48. Assessment of data from the entity's accounting system and whether it's adequate for analytical procedures. Firms generally miss this required documentation element. It's not a required documentation element. 2448 says, shall consider, not shall document. Now, as a practitioner, you may wish to have a checklist prompt saying, I considered that, but documentation is not required and going beyond consideration is not required. This can be confusing. Now, the report then goes on to use the word ensure. It says by doing this required documentation, which it isn't, it ensures conclusions are based on credible information. Now, ensure means make certain that. That is above what even can be done in an audit. It is certainly not a word that should be used in a review. So just to comment on care with wording, and we need to be very careful. In an audit, we will use the phrase reasonable assurance. In a review, we will use the phrase limited assurance. In neither of these engagements will we use the word ensure, because that is above both of those levels of assurance. It means make certain that. And we have to be very, very careful with the words we use. Otherwise, we may unintentionally attract liability. I will not embarrass the people who use these words, but I have seen people say, describe any actual suspected or alleged fraud, illegal acts, or non-compliance with laws and regulations in a review. Far above what we can do in a review or an audit or ever. That's an absolute statement that we have found all fraud, all illegal acts, all non-compliance with laws or regulation. Should not use those words. Be careful. In a compilation, the words are no form of assurance at all. And again, I won't embarrass the people that use these words, but I've seen people say, determine whether any matters exist that would cause the financial information to appear misleading. That's again an absolute statement of assurance that we have found everything, any matters that would cause the financial information to appear misleading. So if you find you have words like that in your checklist, take them out. Why do we get this recommendation on 2448? And I'm assuming what happens is the practice inspectors have a checklist that says, did the practitioner consider if records were okay for analytical procedures? And they find no documentation. So they're unable to complete their checklist and cannot conclude. Now, what I would suggest is, seeing that's not a required documentation section, take it out of the practice inspection checklist. Or say to the practice inspector, practitioner does not have to document it. You figure out from other documentation whether or not it's been done, similar to what 230A7 says. I know it's an audit section, but the philosophy, I think, applies. Now, this is, I think, where not documented, not done comes from, because we hear that from practice inspectors. They can't fill out their checklist. They can't figure out whether you did it or not. You're not required to document that you did it, but they can't figure it out. Documentation is not required by standards, but it's needed for the practice inspector. And as we've talked about before, the standards say the opposite of not documented, not done. Audit standards at least are very clear. You don't have to document everything. The problem with not documented, not done is it urges practitioners to do work that only produces documentation. And we are urged to do things that produce documentation, and we're moved away from doing work that produces evidence. So I don't think not documented, not done is helpful to a practitioner. For 4200, the report says client continuance procedures are not completed before the engagement is accepted. So we're specifying continuance procedures before acceptance. So we're mixing things up a bit. Goes on to say documentation of required inquiries about the use of financial information by third parties and acknowledgement of the basis accounting was not made or updated before the current engagement. These procedures are required to be performed annually at the very beginning of a compilation engagement prior to obtaining a signed engagement letter. I think that's a bit confused. Let's go through what it should actually say. Now, the standard actually talks about before accepting or continuing. Then there's two things we should do: inquire about third-party use, inquire about the basis of accounting. Now, A24 says the acknowledgement of the basis of accounting need not be in writing. I would prefer that it would be in writing. In my practice, I would say I want to do that in writing. Paragraph 25, shall not accept or continue unless management says that management will give the third party any information needed and that management and the third party have agreed on the basis of accounting. Now, that's a good warning and a good tip. The practitioner does not verify any of this. We just get a management representation. I would prefer to get this in both the engagement letter and the representation letter, the engagement letter being obtained before and the representation letter being obtained after. But standards say that this is documented in the engagement letter. It does not say that you have to document it before you get the engagement letter. That is incorrect. That is not what standards say. Standards say that this is documented in the engagement letter. Now, standard setters have made the engagement letter rather more complicated for compilations. And I think what they're trying to do is protect us because they have allowed compilations to be done when there are third parties. So we're trying to protect the practitioner with a perhaps too complicated engagement letter. So should the practitioner do this? Yes, they should. So 26, complicated thing there. Agree the terms with management are those charged with governance. And if you only agree with those charged with governance, then there's a specific list of things management has to specify. Get that all in the engagement letter. Simplest to get both management and those charged with governance to agree. Then there's a list of items for the engagement letter in paragraph 27. Either it's required in writing in that paragraph or it's in paragraph 41. F, a recurring engagement. Evaluate whether a revised or reminder letter is required. Now it's clear that one may be enough. The standard is clear. If you get one engagement letter, you're good. My personal preference, renew it annually, the same as we discussed for audits. And A32 is clear. The practitioner may decide not to send a new engagement letter, so you don't have to. Now, per practice inspection, and they very least overstate things, documentation of required inquiries not made or updated before the engagement letter. 26 and 27, it's really clear that the documentation is in the engagement letter, including last year's letter, if we only got one a while ago. That's clear. Procedures are required. They're not. The engagement letter is required in writing, and it documents those procedures. Performed annually is not required. It's a good idea. I would personally recommend it. Paragraph 28 and A32 are clear. It's not needed annually. You might want to think about it, but it's not required. At the very beginning is also incorrect. Only before. It does not have to be at the very beginning. It has to be before. And an engagement letter that you got at the end of last year is before this year. So that meets the standard. Prior to obtaining an engagement letter, that is incorrect. The engagement letter documents this. The standard is clear. So I'm not going to read this. I'll let you look at it. But here are the handbook paragraph references that tell you what you might say in the report. I think it's too long. So that's probably too long and too technical. I think what I might have said was practitioners should get an engagement letter dated before beginning any engagement. True for all three engagements, particularly for the first engagement. For recurring engagements, it may be desirable to obtain an engagement letter annually to remind the client of the terms. Again, all three. This annual letter may be obtained at any convenient time. Now, this makes the point. It complies with standards, and it's the simplest and most practical. That's what I would have said. When do we get the engagement letter? When do we document? What date do we use? What is a practical answer to that question? Is there a perfect date where, with a reasonable amount of work effort, we can absolutely conclude that we can accept or continue the engagement with absolute certainty? And I think the answer is there is no such date. And I think the reason standard setters have not specified a specific date, they've left it to our professional judgment, is because they understand that there is no such date. So it's then up to the practitioner's professional judgment to determine when they want to get and date the engagement letter. Now, the problem is, and in all assignments, audit review, compilation, if you accept when you shouldn't, you are going to have to subsequently resign, which you don't want to do. It will be embarrassing. It will be public. You can't bill it. So the question is, what's the nature of the assignment? If it's a large audit where resignation will be very public and embarrassing to you and to the client, and you'll have to explain why, all very public, we'd like to have done more work to decide whether we should accept or continue the engagement. But even then, no matter how much we do, there is still the possibility that we will accept when we shouldn't have and have to resign. So, in a first engagement, when do we want to date it? Well, we clearly want to date it before, and even if the standards didn't require us to do that, that is something we would want to do. So that's the date, and it's specified in standards. Now, does the risk that we accept when we shouldn't have, and we have to resign, and it's all public and we can't bill, does that risk exist? Sure it does. There is no list of procedures that is so conclusive. And we have to be careful. We don't want to specify an enormous amount of work that will not be successful in the end, possibly, as we accept an engagement. So, large public company, sure, we're going to spend some time, we're going to ask some questions, we may even talk to some third parties, we like to verify who management is. Smaller, local client who we kind of know who they are anyway, not so much work is required. Now, on a recurring engagement, when we decide we want to continue or not, what do standards say? Well, all three sets of standards say we should think about it. Doesn't require anything. And it's a question of, do we wish to remind, not do we wish to redo the engagement letter. I guess it says that too. But it's particularly in the context of a reminder. For compilations, A32 has a list. There is a list for audits. There is a list for reviews. They're similar but slightly different. So we can't use the same list in each. If we decide not to remind, do we have to go through A32? Not exactly. It's application material, so it just says we have to think about whether we want to remind, and I suppose we could have a checklist step saying that we thought about it and didn't do anything else. That's probably not enough. Doing what's in A32, a lot of time, and we still could be wrong. What I see some practitioners doing is say, okay, January the 1st or some date, we will send a new engagement letter to everyone. Audit, review, compilation, tax, every engagement. January the 1st, we will type up a whole bunch of engagement letters, throw them in the mail. Now, the problem with that is we really don't know anything about the client at that time. We haven't gone through the list in A32 for each client. We don't know very much. Now, it's pretty documentation, and you can show someone comes in and says, did you get an engagement letter dated before the engagement began? Oh, yes, we did. Here it is, dated January the 1st. Yeah, all right. But you still may know not enough to accept. This still may be too much work, and you still maybe have to resign, so it's not a perfect date. Immediately before. Now, the same problem. We still know very little. We will know the most about our client, audit, review, compilation, particularly in a small client, at the end of the engagement. So if we do it before, we don't know a lot, things may still come up that we find out during the engagement that cause us to have to resign. We've accepted we've done too much work. It's embarrassing. Same circumstance. If we pick the report date, at least now we know the most about our client. We probably know the things that are perhaps suggested by A32. The risk we are now at is at the end we find that we can't continue and we have to resign, and embarrassing and can't bill. So there is no perfect date. Any date we pick will have exactly the same risk. They will vary in the amount of work we have to do, but no matter how much work we do, in all these circumstances, we may accept and then find we shouldn't have, and then we have to resign. It's embarrassing and we can't bill. So like I say, large public company, there would be a lot of work that we'd have to, or a lot of work in process that we'd have to abandon. So we want to probably be more careful. But in a compilation engagement where it takes 2 or 3 days to do the work, and on the last day of fieldwork we find, oh my goodness, we don't want to do this client. Oh well, the work that we might have had to have done to do it on January the 1st or before for everybody may not be worth it. So sooner or later, I think you need to renew the engagement letter. You need to remind the client. My preference is the report date. It's a convenient date. We know the date. We date the report. We date the rep letter. We date the engagement letter. We send them all out. If we don't get them, we don't issue the financial statements. The problem with January the 1st is you'd have, or any other date, is you'd have a whole bunch of time and effort being spent finding out whether or not we got it back. And if we didn't get it back, then we'd have to reissue it as of the report date, I guess, and get it in the file. So I don't think there's a practical date. So there's the simplest date, which is my view, is the report date. If you wish to develop a very complex interpretation of paragraphs 24 to 27 and one that would be difficult to simply implement in practice, you can interpret those paragraphs 24 to 27 as meaning prior to, you always have to obtain a new engagement letter prior to the current engagement. Now that kind of contradicts paragraph 28, but if you say, oh yes, I wish to obtain a new engagement letter prior to the current engagement, all of the renewal options on the previous slide, including getting a new engagement letter at the end of this engagement, well, that's prior to the next engagement. It may be a year prior to, but it's prior to. They're all before, and that's what the little b on the previous slide means. And each of those are either immediately before, somewhat before, or well before, but they're all before or all prior to. So all of them meet. If you wish to have that complicated interpretation and contradict paragraph 28 and say you always have to get a new letter, all of those options do it. You can, if you wish, develop a very complex view of getting an engagement letter for a compilation, particularly when there are third parties. And I think what standard setters, and the complexity of this is standard setters are saying be very careful if there are third parties. The point, though, is the third party thing can change at any time. 2 minutes before you're about to issue the financial statements, you've got the rep letter, you've got the engagement letter, you've drafted the financial statements, and the client says, oh, by the way, we're getting a great big huge bank loan, and the bank is going to be using the financial statements. That could change the whole thing and require a new engagement letter and a new engagement and a review, not a compilation. So the complex view I don't think is helpful. The other thing they say about compilations is that the final version of the compiled financial information was not retained. And that's absolutely correct. The shell document requirement is in 41F, not 35. But the other thing that's true is you also have to include the report. And I don't know whether they mean both, but you have to retain the final version of the compiled financial information, including the report. So that's a good point. You need to do that. Quality management standards, lack of adoption, not all elements included, monitoring process not established and not completed. They're being very nice. If you are a practitioner and you haven't done this stuff, this is several years old. They're being too nice. Get on the case. In defense of the practice inspector, while I still think the practice inspector should quote standards exactly, standard setters spent a lot of time figuring out the exact words they wanted to use. And a member who knows standards is going to be confused when they read a report saying, oh no, do it differently. And they may end up doing things that are inefficient or ineffective or not required. However, apparently, some members are not listening. For compilations, the report says many files did not ask about third parties and whether or not the third parties were okay with the basis of accounting. recently or ever. That's unbelievably important. It is absolutely required to get an initial engagement letter and ask about those things. And apparently some members had never done that. And getting a reminder letter, now I prefer annually, but considering whether or not reminders are needed is something that should be done. It's required to be done annually. Don't necessarily have to document it, but you have to think about it. My default option is just do it annually. Some members are not listening. How does the practice inspector get their attention? I don't know the answer to that question. Now, the report in some cases goes beyond standards. Sometimes I agree with this. I go beyond standards too. I say, let's always get a reminder engagement letter. That goes beyond standards, but that's my own personal preference, and that's what I would do. But the report may confuse practitioners, and if, for instance, there's something like the 2400 paragraph 48 thing, where they say you are supposed to have done this, you might say, I think I'd like that out of my practice inspection report. So, thanks for listening.